Good morning. It's Thursday, the 8th of February here in London. This is the Bloomberg Daybreak Europe podcast. I'm Caroline Hepker.
And I'm Stephen Carroll. Coming up today, our finance team uncovers claims that former Barclays CEO Jess Staley used a go-between to stay in touch with disgraced financier Jeffrey Epstein.
Disney posts better than expected results as Bob Iger's turnaround plan shows signs of delivering.
And in search of a power-up, we have a special report on why Chinese Bitcoin miners are heading to Ethiopia.
Let's start with a roundup of our top stories.
The former Barclays CEO Jess Staley has long maintained that he cut off his friendship with Jeffrey Epstein once he became boss of the UK bank. However, legal documents seen by Bloomberg claim he had indirect contact with the late pedophile financier for years after that. Bloomberg's Chris Pitt has more.
According to documents that formed part of a now settled US Virgin Isles lawsuit against Jess Staley's former employer JPMorgan, an intermediary was used by the two men to stay in touch. The filings contradict what Staley told the Barclays board about his relationship with Epstein. It also contradicts a UK regulatory probe that found no evidence of contact between the two men after October of 2015. Representatives for Jess Staley and JPMorgan didn't respond to requests for comment on the claims. Spokespeople for Barclays and the FCA also declined to comment. In London, Chris Pitt, Bloomberg Radio.
Jess Staley left his role as CEO of Barclays in 2021 over the scandal and was later banned from the UK finance industry for having, quote, recklessly misled the regulator by allowing the bank's board to downplay his interactions with Epstein. Jess Staley is appealing that decision by the Financial Conduct Authority.
Now, Citadel has been identified as one of the recipients of Morgan Stanley's leaking of upcoming stock trades. According to people with knowledge of the matter, a trader at the hedge fund was among a number of executives described anonymously in Morgan Stanley's settlements with the US government. The original probe faulted Morgan Stanley for giving hedge funds advance warning when clients planned to sell enough stock to move the market. Prosecutors haven't accused buy-side participants that allegedly received tips of any wrongdoing.
Disney reported earnings that beat expectations in the last 3 months of 2023. The media company also issued a rare profit forecast predicting more outperformance. CEO Bob Iger signalled bigger rewards for investors.
I'm pleased to share that the board declared that our next semi-annual dividend, to be paid in July, will be 50% higher versus the last dividend paid in January. The board has also authorized the company to begin repurchasing shares for the first time since fiscal 2018, and we plan to start by targeting $3 billion this fiscal year.
Bob Iger was speaking as quarterly revenue in Disney Plus streaming subscribers fell below estimates, despite earnings rising to $1.22 a share ahead of expectations. Thanks to cost cutting, Disney says its profit this year will rise at least 20%, which could help to fend off activist investors on the company's board.
It seems that the European Union is already preparing for a second Trump presidency. A formal evaluation of potential trade restrictions that could hit member states is underway. Bloomberg's Tiwa Adebayo has the details.
We may be over 8 months away from the US presidential election, but European officials are making plans for its aftermath. The European Commission, the bloc's executive arm, is working on an impact assessment charting the consequences of a victory for Donald Trump. According to a senior official, a broad minimum 10% tariff, as well as possible countermeasures against European digital services taxes, could come with a second term for the Republican frontrunner. The news comes as some European officials embark on a charm offensive with the presidential hopeful in a bid to improve relations. In London, Tiwa Adebayo, Bloomberg Radio.
Shares in SoftBank have jumped by more than 11% after chip designer ARM forecast revenue far higher than had been expected. The investment firm holds a stake of about 90% in ARM. Its shares jumped by 40% at the end of last year. The chipmaker also predicted up to $900 million of revenue in the first 3 months of 2024, up from the average estimate of just under $780 million. While ARM's share price increase has no direct impact on the Japanese company's bottom line, it does increase the likelihood of new investments.
Well, Europe's earnings season is off to one of the worst starts in at least 10 years, with a majority of companies publishing weaker than expected results. But as Mark Daniel Davies reports, companies delivering positive surprises are reaping big rewards with traders.
Investors who feared that European firms would disappoint in the fourth quarter are richly rewarding those that buck the trend. That's according to Bank of America strategists, who estimate that European shares are displaying the biggest positive reaction to EPS beats since 2020. Firms on the winning side include ASML, which soared to a record high after its results. Santander, Deutsche Bank, Shell and luxury giant LVMH also enjoyed rallies after their results shot past estimates. The biggest reason, though, may be that the bar for the season was set pretty low. Estimates for European earnings had been revised lower for 4 months straight. In London, Mark Daniel Davies, Bloomberg Radio.
Now, in a moment, we're going to talk a bit about one of our key priority features this morning, why crypto miners are moving to Ethiopia. It's a really great story. So we've got one of our reporters to speak about that in a moment. But first, our Bloomberg opinion columnist Dave Lee has been writing about the end of the internet cookie.
Yeah, it's been called the Great Cookie Crumble, Cookie Apocalypse, Cookie-geddon. Cookie-mageddon? Cookie-geddon? I've forgotten that one right.
It's impossible to
Look,
say.
everyone knows the pop-ups that you get on websites, and as Dave puts it in the piece, he could be knocked unconscious and still instinctively manage to click accept all. They are something that are on the way out, though. They've been disabled already. Third-party cookies anyway, which are the ones that are used by advertisers, been disabled already by Apple and Mozilla with their browsers, but Google's Chrome are going to phase them out by the end of September as well. This
Can I
means
cheer at that?
You can, but as Dave points out, it doesn't mean that there's going to be an end to you being tracked on the internet. As he says, this is Google we're talking about, or more up to the point, this is the internet. Ads and data are its lifeblood, and there will still be ways worked out by advertisers and by companies to be able to share this data to give better targeted advertising. He points to a deal between Amazon and Reach, the publisher behind the Daily Mirror, which will see them share data on what articles people are reading as well. So there'll be a way around the cookies, even if
Okay, so I still feel like I'm being followed ominously online. Okay.
Always worth thinking about.
Yeah, absolutely. All right. It's a good piece on the terminal for you to read. Now, let's talk about then our top story this morning. Legal documents seen by Bloomberg claim that the former CEO of Barclays, Jeff Staley, had indirect contact with the disgraced financier Jeffrey Epstein for years after the executive said that he'd actually cut off their friendship. The filings contradict what Staley told the Barclays board about the pair's relationship, as well as a UK regulatory inquiry that found no evidence of contact after October 2015. Bloomberg's Jenny Saran, who leads our team of finance reporters here in London, joins us now to discuss this. Jenny, good morning. What exactly do we know about these documents? What do they show?
Yeah, so these are really interesting documents that our reporters unearthed in obviously a really voluminous legal case. And they basically outline that for years after he had assumed the CEO role at Barclays, Jeff Staley was actually still communicating with Jeffrey Epstein, but using an intermediary. So the documents basically show that when Epstein wanted to get into contact with Jeff Staley, he would email this intermediary who would then go and verbally ask Jeff Staley whatever it was that Jeffrey Epstein was asking him about. And so that directly contradicts, years of what we've heard about his reports to both the Barclays board and to UK regulators, where he said that there was no contact after he had assumed control of Barclays.
So what have Jeff Staley and his former employers said about these revelations?
So unfortunately, Staley has actually not responded to our request for comments. JPMorgan has also not responded. Barclays and FCA both declined to comment for our story. So, this is largely based on these legal documents that came out kind of in the aftermath of all of obviously Jeffrey Epstein's arrest and then his death by suicide. So it's all based on these legal filings that our reporters have kind of relentlessly sleuths through these past few months.
Yeah, and the go-between is unknown because that information, as the team of reporters has been saying, has been redacted. So we don't know who the individual might be. But what do you think the broader implications of this reporting might be? Does this reopen then the questions around Epstein and his contacts with the financial world?
I think so. So I think The one ongoing thing we have in terms of Jeff Staley's involvement in all of this was that he was actually appealing the regulator's findings that he should be barred from the financial industry. And so I do think that kind of throws a lot of that process into question, because I think even just that finding that he would be barred for life from the financial industry was based upon the fact that they were under the impression that he had no contact with Jeffrey Epstein after he took control. And so the fact that, no, in fact, he was using this intermediary, kind of using this roundabout way to still maintain contacts and his friendship with Jeffrey Epstein, I think that's certainly going to be something that regulators will have questions about as they review his appeal. So I think it definitely throws things into question for him. And then absolutely, I don't think really anything was ever put to rest in regards to, Jeffrey Epstein's ongoing friendships and contacts with the top echelons of power in both the UK and the US. But this is just kind of further evidence that, that was maintained long after different accusations against him arose.
Okay, Jenny Serrain, who's leading our finance team here in London, thank you very much for joining us with the details of that story.
Now to our priority feature. Chinese Bitcoin miners, which were thrown out of their own government 3 years ago, are rushing into Ethiopia in search of cheap power and benign regulations. Our senior crypto editor, Philip Lagerkrantzer, joins us now for more on this story. Philip, good morning. What is Ethiopia's current stance on Bitcoin mining, on cryptocurrencies in general? Why is this a country of interest?
Yeah, so it's a bit of a mixed bag when it comes to Ethiopia. They actually banned cryptocurrency trading, so you can't get on Binance and trade Bitcoin and Ether there. However, they made a bit of an exception in 2022 for Bitcoin mining. So they allowed it under a kind of what they call the sandbox regime. And the reason is the Bitcoin miners pay in dollars for the power that they for the electricity that they use, and Ethiopia's government does need foreign exchange. It has a lot of foreign exchange debt, and so it was sort of a marriage of convenience here. And for the Bitcoin miners, it's one thing above all, and it's cheap power. Ethiopia has some of the cheapest power in the world, and it's almost entirely renewable.
What makes Ethiopia so unique from a mining perspective?
There is also the political angle. So Bitcoin miners were thrown out of China in 2021. There was a total ban on Bitcoin mining, and a lot of them had to leave in a hurry. Some of them had to leave millions of dollars worth of equipment behind. Now, Ethiopia and China have very strong political and economic ties. So China is the biggest source of foreign direct investment. China is also the biggest creditor to Ethiopia. And so they've sort of taken, I guess, what amounts to a political bet that they will be welcome there, even after some other countries like Kazakhstan and Iran, and to an extent Russia, cooled on the industry. So there is a kind of political gambit there as well. The other thing is parts of Ethiopia also have perfect climate for Bitcoin mining, the right temperature and the right humidity.
Okay, so the physical conditions are important too. What are some of the biggest global challenges, though, for Bitcoin miners right now?
Well, the biggest one is they use a tremendous amounts of power. These rigs or computers that they use are very power consuming. They're very powerful, but are also very electricity consuming. That's caused problems from, I guess, two perspectives, you could say. One is that some governments just, basically tell them you're competing with industry for power, and we can't have that. Or you're competing with households for power, which is probably even worse. The other one is the global warming phenomenon. So in this era when you have rising temperatures around the world, it's kind of seen politically as, why should you use the equivalent to Argentina's power consumption a year, say, to mine Bitcoin, which doesn't really have any, I guess, productive use, like a car making factory or something like that. So it all boils down to the amounts of power that they consume. But
what are the risks then, Philip, for miners going into Ethiopia? Are there concerns for those that are moving into that country?
Yeah, it is a bit of a gamble, because Ethiopia's regulations around mining, they're not really set in stone. It's they've adopted this directive, which the regulator wouldn't say even whether or not they've actually communicated to the industry. And so the other thing is, will they go the way that, for instance, Kazakhstan did, which is basically open arms in the beginning, and then when you see how much energy this sector consumes, you kind of get cold feet and say, I'm sorry, we're going to pull the plug on this. So it's mostly a regulatory issue.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.